Okay, recording this video on Saturday, the 16th of July 2022. It's just gone 3:49 p.m. Chicago time. Do hope you are doing well. So I will be putting out a video later on the futures market, kind of recap, the weekend recap of what happened this week. But we had some really important big things happen at triple signals go off on the daily charts, and I want to show you that and have a separate video kind of highlighting this turn. I think Thursday's and Friday's activity was super important. The parity in the euro that happened on Thursday seemed to be the catalyst for a whole bunch of kind of moves. Thursday and Friday were strong moves, bounces off lows, and it has generated triple signals on the higher time frames of the indices. I'm going to show you the Emini charts, the daily and the 135-minute chart, where the triple signals have kind of gone off, and just highlight those and say this is a really important couple of days, and we've got to see what happens on Monday and next week, and potentially this could be the beginning of kind of the next leg up. We've just been testing into this lows, and finally we got another triple signal go off on the daily chart. So let me just show you this. So on the right hand side, you can see this is better sine wave on this chart, and the SR1, 2 and 3 levels are all red, which means they're support levels. SR1 stands for support or resistance level in the lowest time frame, and then the 1, 2, 3, 1 is low, 2 is intermediate, and 3 is highest time frame. So there are the three levels. They're pretty close together. You can see on the right hand side here the price points are pretty tight, which is good. The moves tend to be bigger moves from tighter kind of congestion that's going on, so we kind of tend to explode out of that. It also happens to be a second cyclical turn after end of trend. So on the daily chart, on the lowest time frame here, we put in when we broke support, we broke into this last leg of the downtrend, which gave us a pullback to end of trend, and then we've gone resistance just here, tiny little white lines that you can see, down to this first support. So that is second cyclical turn after end of trend. So end of trend, one cycle turn, two cycle turns, and what that means is the trending move is down and ended, and we have gone into congestion, and we have put in one cycle of congestion, resistance to support of congestion after that end of trend. Trending patterns don't tend to just end dramatically and then reverse into uptrends. We need to go through a little bit of congestion before the market kind of decides, right, I'm ready to break into the next trending move. So it's triple signal on the daily chart. It also happens to be second cyclical turn after end of trend, which is kind of good, so we'd expect some kind of a breakout move. On backing it down at one other time frame to the 135-minute chart, same thing. So we've got triple supports going on here. I need to do that in order for you to see it on the chart. There we go. SR1, 2 and 3 is a triple. Not so tight together as the last chart, but the trending move on the downside is kind of finished. And I talk about the end of trend signals rippling through the time frames, and this is kind of a classic. So on this move down, we had end of trend and end of trend on the lowest time frame, and that signals a left shoulder, an inverted head and shoulders pattern. So a left shoulder with the end of trend on the lowest time frame. Then we went and put in pullback. It's just there on the intermediate time frame, the thicker lines here to end of trend on the intermediate time frame. So that signals the head of the inverted head and shoulders move, and now we're putting in a shoulder here on the right hand side of this inverted. So shoulder, head, shoulder. So we've got a triple going on here, and what we should do is hold at this level, break up above, you know, this last resistance around 39.22 or so is going to be an important level. That breaking through that would kind of give us confirmation that we're going to go higher, and we're going to put in a resistance on the highest time frame. You can go down to the 45 and the 15-minute charts, which showing strength. This is the bounce on the 15-minute chart from the euro parity trade that kind of seemed to bottom the market simultaneously in a whole bunch of FX markets and crude and what else, bonds and so on. It all signaled down at this low, and then we've had two really strong days. So the big things happen at triple signals or in the higher time frames, so the daily and the 135-minute chart. They've not kind of signaled 45-minute or 15-minute chart, but that's not important. What is important is that they've gone off on these highest level charts, and we're due for I think a bounce back to test the highs. I've been saying this for a couple of weeks now, and we just need to kind of test into the lows and do enough kind of damage on the downside so that everybody's kind of out of the market and then finally we can start to reverse and kind of go the other way. And I know the numbers are bad in the economy, and people are talking about kind of us going into recessions and things kind of slowing down, but remember the futures market, the equity indices market, kind of predicts the economy 6 to 9 months out. So we've had this decline since December into June, July, so we've had 6 months of weakness, and so that's predicting what the real economy is going to do in the next half of this year. Now the market is suggesting that in 6 or 9 months time the real economy will have kind of bottomed and will kind of be bouncing back, maybe with accommodative Fed policies or whatever it takes. So just because the real economy news is bad doesn't mean that the market can't rally in the meantime. Anyway, dedicated video on this pattern that's gone off on the daily charts. Big things happen at triples, so let's watch out and see what happens in the next couple of weeks.